Just a reminder guys, if you really want to see what it's like day trading a small account, join us every weekday morning starting at 8:45 a.m. market time right here on YouTube. I review what's moving in pre-market and then day trade my small accounts on Ustock, TradeNet, and Robinhood live at the open on stream. The stream also includes a free day trading chat, and so make sure you hit the subscribe button if you want to check that out. And with all that being said, enjoy this video. Okay, so in this video, I want to go over something that has definitely helped my trading, but it's something I didn't quite understand at the beginning. So when I first started trading gaps, my basic setup was to go long if the stock was gapping up, kind of the very popular gap and go setup, and to go short if the stock is gapping down a significant amount. And while I understand this thinking, once I matured as a trader, I realized that what works for me in trading is essentially doing the opposite, if that makes sense. So Warren Buffett once said that it is wise in investing to be fearful when others are greedy and to be greedy when others are fearful. This is directly relevant to what I'm talking about, and I definitely think that quote relates to day trading as well. As you know, my favorite strategy is to short overextended gaps at the open. I basically look for overextended stocks gapping up over 10% and short them once they break the lows. Now, a good example of that is AGMH from Friday. You can see it was gapping up a ton all the way to 1590 from the 850s, and once the bell rang on Friday, this thing just washed out for the remainder of the day, eventually going all the way down to 830 where it's at now. This setup tries to take advantage of the incoming wash once the bell rings, and the reason it works so well is because since the stock is so overextended already, many long traders that are holding it over the night tend to start covering their positions at the open. When they sell and other people see that weakness, they start shorting it as well, and it starts to squeeze the stock downward. Now, another example of this strategy in the opposite direction is the swing trade I'm holding over the weekend. Now, if you look at HMNY, this thing was down a pretty big amount on Friday. I ended up jumping in right here at 224, so almost at the bottom, and the reason I jumped in was simply because it was down so much already on Friday. I thought it may bounce some in the after hours session, and you can see it did just that, bouncing all the way to 248. Another reason I got into this trade was because you can see the low of the past few weeks is right down here at $2.12. Since the low is so close, it was a decent risk reward setup, allowing me to have a very obvious and defined risk. So if it breaks under that 212 low of the day, that's my cue to get out of the trade, and it's very easy for me to look at that point. Another example of this from Friday is from Skechers. One of my profitable day trades during my all-day stream was jumping in Skechers right here around the lows and riding it up for a push. I think I got out at about 30.50, maybe 30.55, and I got in pretty low, so I made a decent profit with that. But it's the same strategy I'm talking about. If you look at how much Skechers was gapping down overnight, Thursday night into Friday morning, it was just down a huge amount, about 25%. And so when that happens, I'm definitely more long bias with it, looking to take advantage of a possible bounce. Now, it did drop originally at the open, but once the line in the sand was kind of drawn here, and you can see there was a previous support line here, I decided to jump in and just risk it, and if it broke the low of the day again, I would jump out of it as well. And so I'm not saying that buying it after huge drops and shorting it after huge pushes will always work, but the level of extension is always something you want to take into account before entering a trade, long or short. So if you consider it, your trade should have much better success rate, and I know it has for me, and that's just something I wanted to leave you with. Anyways guys, that's the end of this video, so I hope you can use some of this stuff in the market. Our Friday all-day stream went great. I had a ton of new subscribers and a lot of people there talking about what's moving. And so if you haven't already, join us every weekday morning starting at 8:45 a.m. market time. I review what's moving in pre-market and then day trade my small accounts live at the open on stream. I also include a free day trading chat with the stream right here on YouTube. And so make sure you hit the subscribe button if you want to check that out. And I just want to thank everybody again for all the support. Anyways guys, good luck on Monday, and I'll see you all then. Thanks for watching guys.